Morning, Steve Free in Chicago with the morning grain comments. Well, we have markets that are somewhat steady. Wheat's up about 8 to 9 cents, corn's up a penny, and wheat and soybeans are about unchanged. As far as over the weekend, I think the market was actually looking for a little bit weaker tone because we had rains across part of the northern Midwest. This week, temperatures are supposed to back down from the heat that we saw this past week. The second week forecast is mixed. It tries to bring the ridge back in. Another set of maps has the ridge still in the southern plains with scattered showers across the northern part of the Midwest. People expect the USDA to keep crop ratings for corn and beans unchanged, 76% good to excellent in corn, 71 in beans. That suggests a yield bigger than what the USDA is saying. So that's why we've seen such a steep drop in prices. The market thinks we're going to have a bigger crop, bigger supply, and a bigger carryout. Still, on the demand side, both corn and beans is record demand. And so we're not getting enough corn going into the pipeline. Cash is firming up, and that could support corn prices at current levels. We're also forecasting September through February record soybean demand. So that should also offer some support despite talk of the higher supply. The big thing in beans, though, is talk that the Chinese government could sell out of their soybean reserve soybeans to the crushers. That could reduce their import demand by as much as 120 million bushels. That would be a game changer as far as soybean prices are concerned. So we have to watch that rumor pretty close. The drop in the European crop could be as much as 10 million tons. That could make U.S. exports, both soft red winter wheat and hard red winter wheat, competitive. We haven't seen any demand yet, but with the fund's record short wheat, they're beginning to cover that short on these news. We don't expect wheat to rally a lot, but it has come off its lows, and it probably could see some more short covering as long as European prices continue to work higher. Outside markets, you got the dollar lower, crude lower, and when you look at commodities in general, you've seen that they've taken value off their prices, and that could be due to Brexit, or it could be just a concern that there could be a rippling effect on world economy. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.